सावधान इन्वेस्टर, चैन से सोना है तो जाग जाइए। अगर आप अपनी जिंदगी में इन्वेस्टिंग मिस्टेक से बचना चाहते हैं तो ये वीडियो आपके लिए है। अगर आप ये वीडियो एंड तक नहीं देखेंगे तो आपका इन्वेस्टिंग में लाखों का नुकसान हो सकता है। तो चलिए ये वीडियो देखिए शुरू से लेकर एंड तक। Namaste everyone, welcome to our YouTube channel. I am Pooja Sharma. In today's video, we are going to talk about 5 investing practices which if you stop today will save you from losing your hard-earned money tomorrow. Let's get started. So in life, there are 2 ways of learning from mistakes. One is a little expensive, wherein we do the mistakes ourselves and then we learn from it. This is what we do when we're young and dumb. The second one is a little cheaper way, wherein we look at others, look at the mistakes that they have done, and then learn from them. This is what we do when we are a little older and a little wiser. This video is all about following the path number 2, that is learning from the mistakes of others. Without wasting any more time, let's get started. Number 1. Recency bias. Recency bias is a mental bias we all tend to have, wherein we give more importance to the recent events than what has happened in the past. Let me give you an example. In the past 1 year, there has been an insane rise in the stock market indices. Now, this has brought about 2 changes. One, a lot of new people have entered the stock market like never before. And number 2 is that these new investors have formed a recency bias. No fault of these new investors, but Morgan Housel mentions in his book Psychology of Money that individual investors' willingness to take risk depends on their personal history. What this exactly means is that investors' perception of risk is based on their personal history. Compare the stock markets in Germany, Japan, and the US World War II. While the German and the Japanese stock market got completely wiped out during the World War, as many regions got bombed out and there was hardly enough food for its citizens to survive. During the same time, the US stock market more than doubled between 1941 and 1945. Now, if you expect a German or a Japanese from that era to have the same feeling about the stock market as that of an American of that era, that won't be right, my friend. Similarly, expecting this recent rise to be normal and believing that it will continue forever will be anything but wise. And this is what we should be aware of, at least when we're investing in the stock market. This brings us to the second mistake we make because of this recency bias, and that is to put all your eggs in one basket, that is wrong asset allocation. As we discussed earlier, that our recency bias makes it easier for us to believe that this bull run is going to continue forever. But if stock market crashes like that of 1929, 1981, 1987, and even the recent ones like 2008, 2020 have taught us anything, it is not to invest all your money in one asset class. It is important to note here that asset allocation varies from one person to another, and it is based on one very important reason, and that is financial requirements. My financial requirements are going to be completely different from yours. It not only varies from one person to another, but it also differs with the stage of life we are in at that particular point of time. For example, a 22-year-old working in his first job will require a completely different asset allocation model as compared to the person who is going to retire from his job next year. Likewise, a 50-year-old father would be requiring to liquidate his investments next year so that he can send his child abroad for higher studies would require a completely different asset allocation model as compared to a 32-year-old father who is planning to buy a house next year and wants to move with his newborn and his wife there. If you want us to make a separate video on asset allocation, do let us know in the comment section. Now coming to the third mistake, and that is not having enough cash liquidity. By now, we all have heard advices like have an emergency fund or be patient, but do you know that both of them are related? Let us see how. We all mentally believe that even if there is a market correction today, the stock market will rise again, maybe tomorrow, maybe day after tomorrow, maybe next week or next month, but it will rise for sure. But when we actually see a bloodbath in the stock market and see that our investment worth rupees 1 lakh has become just rupees 50,000, that's when all human emotions like fear and greed set in. And in that moment, it becomes really difficult to hold on to our investment and resist the urge of selling all the shares and save whatever money we can. In fact, the red color has been used strategically in the stock market to show that the market is down, just so that it triggers the feelings and emotions of fear and uncertainty in the minds of investors, forcing them to take some action. Now I understand that everybody is not the same and there are investors who are patient and are not at all worried seeing their portfolio painted red, but because of not having an emergency fund for the next few months, he will have to sell his investments to meet his daily family needs. Not having enough cash liquidity also stops you from buying shares when they're available at dirt cheap valuations. So you see, you will not only have to sell when you don't want to, but you will also have to let go of the opportunity to buy when you could have. Now this brings us to the fourth mistake, that is over-diversifying or over-diversifying. Yes, diversification is essential because it reduces your overall risk profile of the portfolio. But remember, a few bad investments will significantly impact your portfolio's eventual returns. So the best way to diversify is to add an asset or invest in an asset that has a completely different risk profile from your existing portfolio. Then only you will be able to truly diversify your portfolio. Oh yes, one more thing. I've often been asked this question that, ma'am, how many stocks should one ideally have in their portfolio? Well, to be honest, although there is no absolute cutoff point that separates an over-diversified portfolio from an adequately diversified portfolio, but it is considered to be 10 to 15 stocks. Fund manager Samit Wartak has articulated this beautifully in this short clip. Let's check it out.
Once you have a well-diversified portfolio of 16 stocks, you can diversify away 95% of your risk. Beyond that, it doesn't really add much incremental to it. So if I'm assuming 15-16 stock portfolio, that means my average size of the portfolio, per position is 6-7%. So I try to position around that. If I'm really convinced, if there's enough liquidity, I'll put maybe 9-10%. If not, then I'll put 3-4%. So it's just that average with which I try to play around.
Also, we must realize that at the end of the day, we can only have that many high conviction stocks, right? So when one invests in 30 to 40 stocks, it not only becomes difficult to stay up to date on all the businesses, but it also takes away the investor's focus from their highest conviction stocks. Now let's talk about the fifth mistake, and that is timing the market. Believe it or not, whether you're a newbie or a market veteran, we all have done this one thing. Calculating the day's high and the day's low of a particular stock, which we had bought early but then sold it off, and right after we sold it off, the price rose even further. Or worse, we had wanted to buy but waited a little longer and now the price of that stock has risen even further. And this is when we curse our misfortune. और वहाँ रुकते नहीं हैं हम. अपने घाव पर नमक छिड़कने के लिए we also calculate the profit we could have made had we timed the transaction well. करा है ना? करते हो ना? Let me know in the comments. Please, genuine answer. Now, if you look back and think to yourself that were you ever able to buy at the lowest price and sell at the highest price of the day? It never happens, right? When it is this difficult to time your investment in one stock, how can one imagine to successfully time the entire market, knowing all the macro and the microeconomic conditions? This is something I really never understand. Like, why, bro? When Sensex was at 27,000, most people felt that it would fall more. More it will fall for sure. When Sensex reached 40,000, most of the people felt the bubble is going to burst anytime soon, I'm telling you. Now, my friends, let me tell you that on 24th September 2021, Sensex crossed 60,000. Yes, 60,000. Let that emotion sink in. You see, the truth is nobody, not even the so-called market experts, know how the market is going to behave the very next day. Then how can a beginner investor like us perfectly time the market? Warren Buffett once said that in the short run, the stock market is like a voting machine, but in the long run, it is like a weighing machine. That is, in the short run, the market is acting like a voting machine, reflecting all kinds of irrational attitudes and expectations arising out of fear and greed, while in the long run, functioning as a weighing machine, reflecting the company's true value. In such a condition, it is only wise to keep your SIPs going and keep rebalancing your portfolio from time to time according to your financial goals. That's all for this video. I hope you enjoyed this video. If you did, give it a thumbs up and subscribe to the channel if you've not done it already. If you have committed any of the mistakes, then I hope you were able to relate to those mistakes. And if you're a new investor or a beginner, then please make sure that you do not commit these mistakes in your investing journey. Because अगर आप अब mistakes करोगे तो ये investing का पाप है. Do not commit an investing sin. Be a wiser investor. Until next time, bye. सावधान इन्वेस्टर, आपने अभी तक इस चैनल को सब्सक्राइब नहीं किया है तो कर लीजिए। यहाँ पर हम इंपॉर्टेंट इन्वेस्टिंग से रिलेटेड वीडियोस, पर्सनल फाइनेंस से रिलेटेड वीडियोस बनाते हैं और आपको वो वीडियोस बहुत काम आ सकती हैं। तो आपने अभी तक चैनल को सब्सक्राइब नहीं करा है तो अभी तुरंत इसी वक्त कर लीजिए सब्सक्राइब। ऐसा सुनहरा मौका बाद में नहीं मिलेगा। गीता रिपोर्टर साइनिंग आउट।